Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of Brent crude oil and spot gold.
ICE Brent crude oil futures. A combined key reversal down and bearish engulfing pattern on Friday, if only just on the latter, after the previous session's hanging man pattern. Now, whilst we had seen earlier closes over the 50% absolute Fibonacci line at 73.73 and the May 2019 high at 73.38, the market on Friday closed back below the 50% absolute Fibonacci line. This was, I suspect, caused by the combination of the bearish pressures overhead of the mauve flatlining medium moving average, currently at 74.26, and the big picture item of the overhead dark blue upper time, currently at 74.58. Of the showrunner for this market since last summer, the broken, now repaired, or seemingly repaired, April to July 2024 bearish shift pitchfork. This upper time is also melded in since late February of the declining short medium moving average, currently at 74.51. Over all these resistances we have the bright red neckline, currently at 75.09, of the even bigger picture action seen since early September last year to date of the head and shoulders continuation pattern last year, which along with the peak in January can also be seen as a possible, if lopsided, bearish cat's ears pattern. This would be a significant bearish pattern and it would give a target X1 down in the 64 even zone. Personally, I had thought this might be a bit of a stretch, but until the couple of weeks or so passed, it still showed up as a possibility. Now looking below, we have another congestion zone between 71.29 to 72.29, consisting of highs and lows from 2019, 2020 and 2023. Now so far today, a higher open and a push up over the mauve medium moving average, but halted at the combination of dark blue upper time and short medium moving average. However, we also have a push down below Friday's close, such that we are set up today for a possible key reversal pattern, a daily key reversal pattern. Thus, if prices close tonight either over 74.03 or under 73.63, then we'd be on. Anything in between and we would have a lesser outside day pattern. Right now we were looking at an outside day pattern, but we have just moved up to looking at a possible daily key reversal. But it's still early yet, there's a whole day's trading session to still go on. Spot gold. A bullish open and close white Mariposa on Friday and second bullish white soldier. It was also a new all-time high, open, high, high, low and close. I hope I've got that right. So it's opened higher, its high was higher, its low was higher and its close was higher. Prices are nicely moving up within the dark blue early January to late February bullish Andrews pitchfork, which has shown the bullish angle of attack of this market since late February, pushing up Friday over the middle time, currently at 30.69, and towards the upper time, currently at 31.47. As I've said throughout the last 3 weeks when looking at the recent action, I saw a pattern here, an early January to date bullish halfway hesitation, with potential up as far as target X in the 31.50 area, which we're not too far away from really. Nothing so far has altered that view. We now also have overhead the 50% projected Fibonacci line at 31.26. Plus I've noted the smaller bullish halfway hesitation formed over March, which has an even higher target X1 up in the 32.31 area. Now so far today, a slightly higher open with a dip down towards the dark blue middle time but rejection back upwards before reaching the upper time, reaching and now testing the overhead 50% projected Fibonacci line at 31.26, which is just below the upper time.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.